Hey guys, welcome to another week. Hope you guys had a very great weekend. This week our highlight is going to be on the USD card, and we had this analysis from last week, which is moving in very good profit. So what we're going to be doing this week is to review what had happened. Let's see what we expected, what has played out so far, then make a further projection of what we expect, and just going over the charts again. Let's look at what we had last week. Last week we had a setup as such, and we expected the price was going to come, and prices are going to reject right on this level and break this, and keep going down. So let's go back to the chart and see what price did exactly. So price did exactly that. After rejecting right on this level, there was a bit of consolidation. We held in. Stop loss was placed above. It made the break. It made a candlestick retest right here, and after that it started to move down, and we're expecting even a further move. This was supposed to be a trade of about, I think, 1:8 risk reward, right? We risked about I think 70 pips, and we're going to about 550 plus pips, right? Which is a very good one for us. And so far, what has the price done so far? Prices moved in about 100 and 96 pips so far. So we want to project what do we expect this week, right? So let's look at the fundamental sides of things, right? Crude oil has started to appreciate. The demand of crude oil has begun to rise higher. And why is this so, right? Because the world is in like a recovery mode right now. The COVID vaccines are getting back. Economy is starting to open up. And what does it mean? When economies start to open up, activities start to open up. In fact, some other countries, we have some countries that have opened up fully, right? So economy opening up is more activity, more movement for people. People want to make use of things, and as the demand of crude oil went really big in the market. Last week, I think we had crude oil right about, I think, $69 per barrel, which has been a high in a very long time, right? That high hasn't we haven't seen that high in a very long time. So because of that, the card being directly influenced by the change in the price of crude oil, definitely was strengthened last week, and that's why we see this very sharp fall. We had some little time of consolidation, but overall we had a very sharp fall. Strength of card means the weakness of US dollars, hence we see the US dollar falling and the card increasing in strength. So fundamentally, everything is pointing to the downside. So let's take a review again and see what had happened technically, and then let's make a weekly projection in a jiffy. So now let's go to the monthly time frame. So on the monthly time frame, what did we say, right? We are actually looking for at price breaking this zone, and we are expecting price to move to the next zone, to the downside. Exactly. So what had price done? Like 4 months ago, we had the break. 2 months ago, for the past 2 months, we have consolidation, right? This is a push exhaustion kind of situation, right? A strong push to break this last zone, which is the gray zone. We saw an exhaustion, and what do we have, right? We see a continuation of push to the downside. So let's go to the weekly time frame. What do we expect on the weekly time frame? What we did on the weekly time frame was to make sense with the information, with the story of what had been happening. So we saw the rejection right here, rejection right here. We could see a mini rejection right here, a break to this key zone, right? So this key zone really held a little bit for a few months, right, before we saw the break. So this zone right here, which is the lower mid-range or monthly mid-range zone, rejected at the weekly mid-range zone, which is identified by this blue zone. Then actually, right when price got into this level, what do we see? What do we see right here? We saw the injection of sell orders into the market around this level. The injection of sell orders into the market around this level caused the break of this key zone. So immediately we got that. What do we expect? We expect a retest, right? We can see the retest right here for further more injection into the market, right? So this is more retest, more injection into the market right after the break of this level. So after this injection to the market, I will see price go to the downside, right? We start to understand the fact that price is going to the downside, right? And the next point of target, the price will be going down is around the 1.21 zone. How do we understand understand the price is going that, right? Definitely is pre-historical data. We see what price did exactly right here, and price is repeating itself. It may not repeat itself 100% way just like that, but definitely it's making the next move to this side, right? So we're looking forward for price dropping into the side, which was the basis for our analysis in the first place. So what did we do on the weekly time frame? We identify the 3 zones. It's all about identifying zones the price is moving, right? So after price broke this to the downside, we saw the price was moving in a kind of zone, right? Put it on the line chart to understand things, furthermore. When you put this on the line chart to understand things furthermore, you're going to see the upper zone, the mid-range zone, support or resistance, then price hits this level, right? So immediately price hit this level, definitely we identify the zone that out, and we move to the daily time frame to amplify what had happened. So what had happened on the daily time frame was very simple, right? After price made this retest, price began to move in AB pattern. AB pattern right here equals the CD pattern, right? So immediately we got the AB equals the CD completion. I think we wrote the CD move. I think we wrote the CD from this point to this point, and we hit our TP on that, which was a very good trade for us. So the moment we see the CD completed, definitely you understand the rule of this. The rule, right? When you see a heavy B to C retracement and C to D completion right here, there's bound right on this level. Right on this level where price complete the CD, we are bound to see a rejection at least to the 61.8. This is a very strong principle that everyone needs to understand in the market. At least the 61.8 level, and if the overall direction says it's still going to be to the downside, then before we find a continuation, which was exactly what happened right here. So let's take it again. We saw the AB. We saw the AB right here. We saw the retracement B to C right here. And we saw the next phase of push or extension C to D, right here, which on the Fibonacci level is also on the 161.8 extension, right? So after that, what did we get, right? We saw the rejection. This rejection went back exactly into the 61.8 Fibonacci level. You can see the 61.8 Fibonacci level. Let's expand this to make it much more clear, right? You see the 61.8 Fibonacci rejection right on this level. So immediately we saw the 61.8 Fibonacci rejection. We already anticipate a sell right on this level, right? We anticipated a further sell right on this level to the downside, right? So now what did we do right there? So apart from we expecting a sell right there, we saw that the diagonal resistance, right, which has been rejecting touch 1, touch 2, the third touch, the fourth touch, the fifth touch. This means we have double resistance. Number one, the Fibonacci 61.8 rejection as a result of the AB because the CD completion, which rejected to the 61.8 resistance number one. Resistance number two, we have the diagonal resistance of the trend line, coming in play. Then resistance 3, right? We have the mid-range zone of the weekly time frame, which encompass, this trade all around, right? You can see the mid-range zone somewhere around this point. So, right. So we have 3 resistance in play: the zone resistance, horizontal zone resistance, diagonal resistance, which is the trend line, and the Fibonacci resistance. Definitely, we know that a sell is inevitable, but do we just enter the market? No, we have to wait for confirmations of our confirmations. So what did we do? We know something for sure, that if price should reject on that level, definitely our continuation of push to the downside is inevitable, right? So what was the reason why we get in last week? Then after getting the reason why we're going last week, that we can actually move to projecting what we expect this week. So on the 4 hours time frame, after price gave us the A, B, C, and C, D, we took a trend line. We saw a slower trend line, right, at C to D, right, and we took it right down. Definitely correlated with, this trend line that's been happening over the long term, right? So what do we expect, right? This is the rejection right on this level. The moment we saw this rejection right on this level, we're not just going to get in. We're waiting for price to give us the double confirmation, right? So immediately we saw the price move to this level, it established a low for us. Then we know something for sure, that if price should break this, if price should come back to this level and reject this level back again, then we could be having a sell. So what did the price do? Came back, reject this level, and gave us a very strong, you can see the inverted pin bar right on this level. Then immediately we got inverted pin bar right on this level. Then we know that it's inevitable. Then apart from that, we went back to the daily time frame, bring out the mini Fibonacci right from this level to this level, and we saw this rejection. Immediately we saw this rejection after this close right on this level. We know it was ready for a sell. So what did we do? We picked the sell right on this level because this couldn't break this key level back again, rejected this key level back into this trend line, which is the 4 hours was resistance. Now we have a fifth resistance in play, right? And immediately it broke into close below. We actually picked a trade. We waited for after the inverted pin bar, which is the bearish pin bar. We waited for a continuation. Immediately we saw the continuation. We had to like place the stop loss around 70 pips, for a swing trade, which is going to give us about 550 plus, which is a really good risk reward for us. So what the price did, it break this key level, right? It broke this key level. After price broke this key level, this is a further confirmation for a much more injection to the downside, right? After it broke this key level, you can see how the momentum was so high and price rejected the downside. So now this has been so far about 190 plus pips so far. So what do we expect this week? Definitely overall direction, we expect price to make a further move this week, right? But then for people who are not engaged in all of that, you may be looking for to enter, right? So there's one mistake that people do, right? You don't enter a trade when the trade is in the phase of push, right? Because after a push, definitely there's always got to be a period of exhaustion or a rest, right? And don't enter at the completion of a push, rather enter at the completion of an exhaustion. So if we can find an exhaustion here, this is a further opportunity, to further make the push to the downside. So this week, what do we expect, right? What do we expect on this week is very simple, right? Now the price is reached this low that it reached in the previous low. Do we expect anything really spectacular for price? Right, we have two things in game, right? If price should break this to the downside and give us a rejection or an exhaustion right here, then we can consider enter this trade at the end of this exhaustion, where the next phase of the bearish injection is going to enter into the market right here. But if we didn't get that, we have another case scenario at heart, right? We expected the price to make a push, right to somewhere around here. And by the end of this exhaustion right here, then this we can be looking forward to getting into the market. So we have two case scenarios for the market this week. For we that have been in the market, are swinging inside the market, definitely we expect that, we're just going to keep managing our trade and we're just going to keep riding up. But for people who want to seek a new opportunity into the market, because the fundamental points to the downside, strength of the CAD, strength of the crude oil, weakness of the USD, the stimulus package get pumped in, supplies much in the market. But for people who want to take advantage of that, looking at the fundamental pointers, the technical pointers to the downside, definitely it's not enough to have a setup that says it's going to go this. It's about finding the right place to get into the market. So we have two case scenarios. If we have price reject this zone, because price right now is finding a support, the previous area of support, right? We expect the price should have an ejection into the an exhaustion to the market, then definitely we're going to be looking forward to take advantage of the end of the exhaustion. Remember, don't enter a trade at the end of a push, because after the end of a push is bound to be an exhaustion. Enter at the end of an exhaustion when the next phase of push is ready to go in, so that you can be able to get into the real time where the market is moving. So definitely these are the two case scenarios we're expecting. It's either it plays this way, or either price plays exactly give us a retest right on this level, end the exhaustion, that we can keep moving to the downside. So whichever way it plays out, all pointers is going to the downside. But the first case scenario, right, is less rewarding than the second case scenario. I mean, from here to here, you could secure as much as 100 plus pips if we could find an exhaustion to this level. So sit out. We're going to be watching out for what price is going to do. For we that are already in the trade, like I said, we're just going to keep managing our trades. And if we find a re-entry opportunity to even add more to a position, whereby we've broken even the first trade, so that we can make exponential profit on this, definitely we're going to be looking out for that. But for people who haven't gotten in weight, there's definitely got to be a phase of exhaustion in the market, right? After a strong push like this to the close of the week, we expect an exhaustion. Enter the end of the exhaustion so that we can make the push on the next side. And when the trade starts to move in your favor, don't forget to break even. You just want to break even. You want to secure a profit. Thank you guys so much. If you like this, if you love this video and you find this video really insightful, we urge you to like, share, and comment on our YouTube or on Instagram page or any platform you see this trade. Thank you so much, and have a very blessed week ahead.